Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. We're taking a look at the continued climb on the S&P. You can see here once again, we're climbing through the previous session close. We're in the bullish hemisphere to start off the day. And the thing to remember about being where we are until we drop back down, say, 5,600, specifically 5596 and a half, I'm going to stay bullish. I'm going to be focused on setups to the long side. All four indices are above the previous session close: Dow, Russell, S&P, and Nas. It's actually the Russell that is almost 1% higher than the previous session close as we kick off the morning. So that's something that's worth keeping an eye on, as well as the KRE. Remember, the Russell has really lagged the broader averages all year long. So if you take a look at the NASDAQ here, right, take a peek. That's pretty much what we've done. Yes, it's very choppy right now, but if you take a look at where we were, where we are, where we've been, ultimately you can see the overall movement has been up. Now step back and take a look at the Russell. It's a very different look, right? And I hope this just, I try to show this stuff by way of data and price. I just hope this kills absolutely ridiculously stupid things like the Russell leads the market. I don't know where that comes from, but the utter nonsense of it is an opportunity cost. If someone's looking at the Russell thinking, oh, the overall, the broader averages and the overall sentiment about the Dow, Nas, and S&P have everything to do with small cap stocks in the US, I don't know where that got traction, but I hope we can kill it right here. Another thing that we want to keep an eye on is KRE. So before we get too excited about any kind of recovery in the Russell, we want to remember that the Russell was bearish. It's gone neutral. And now we've got the largest sector in the Russell trying to recover to the upside. It's going to be opening somewhere just shy of 55 this morning. But remember, we've still got a long way to go before the Russell and the KRE ETF, the regional bank ETF, are moving together. So keep that in mind. All right. So let's get to it as always. I think we've got some questions coming up, and let's jump on over to the ES. We take a look. All right, first up is Lon Milo asks, I don't see the anchored VWAP in Thinkorswim. The anchored VWAP I use is one that we've been using and coded ourselves some years ago. There are a number of platforms that are starting to introduce an anchored VWAP, but that's not been the case for many years. I don't know that the Thinkorswim platform has an anchored VWAP, but ultimately, there's a lot of different ways to look at an anchored VWAP. If you go to, say, TradingView, that's another choice you can consider. All right. But again, mine's one that we had coded years back because anchored VWAPs, for whatever reason, are an oddly neglected corner of indicators. Gwen asked, I was going to ask about the Russell. Yeah, it's looking very, very strong, bullish this morning. And as far as day trades go, one of the things I really like about the Russell is the fact that it's a pullback to the hourly price movement range should end up above the previous session close. And that's going to be the ideal scenario. And let me make this super clear, because when we look back on how September has been going and how August has been going, September has had two big shifts that have worked very well for us in the mastery. And everyone can, to some degree, use these ideas. One, the day trading's been tough. It's been far less frequent in even terms of setups, and the follow through has been far tougher than that of August. So that's the first thing. The second thing is the swing trading has been great. I think we have 8 swing trades open right now, and it's only the 13th. So let's see here. I'm taking a peek. Yeah, we have about 8 swing trades open with anywhere from October 18, September 30, and September 20 expirations. The main thing that we've been doing with the swing trades we've been much, much more, I don't know if the word would be conservative or aggressive, but I've been looking at nearer term, closer targets to scale out at, because one of the things that we teach in the room is that your first target is your very first step in risk management. The first target is not about, oh, can we double our premium or any other such nonsense. It's really about at what stage in the trade can I start to shift the risk profile? And if that's a new concept to you, on the 24th of September, I'm going to be doing a webinar where I'm going to be walking through really what I believe to be true, that risk management is account growth, and how do you grow an account of any size, including a small account. So we're going to be getting into those things, but shifting the risk profile as the trade goes in your favor, from understanding what the early stage of a risk reward ratio is to maybe the latter stage of a trade where the risk reward ratio should be different than when you first started. The risk profile will change in the life cycle of the trade. Knowing how to do that is a big part of it. So let's say, for example, I look at the, I'm mentioning how well swings are working in contrast to day trades right now. So if I am looking at managing, for example, one of our more recent entries is XLP. We're in the midst of shifting that risk profile because now we're going to hit a second target on these XLPs. And I'm trying to pull up my, let's see, where is it? My recap. There we go. So this was the recap I sent out to our members. These are all positions that we have right now. So every evening I send out a recap. Everyone knows all of our entries, where we've scaled out, etc. So take a look. We've got Johnson & Johnson. The risk profile on Johnson & Johnson has shifted to favor the account growth. The risk profile on XLP has shifted to favor that account growth. And that's not something you're thinking about doing. It's probably because at this stage, maybe the account growth, is still eluding you. And a lot of it has to do with understanding where we shift from risking our capital to house money and how we do it. And if we get to that point in our trading, whether we have a $7,000 account or $70,000 account, it doesn't change. Really, all that changes is the account size and therefore the number of contracts that we trade. So it gets pretty exciting when you think about the application of any kind of account growth formula and how it applies to every kind of trader. $10,000 account, $1 million account, I'm going to teach the same thing. I've traded both sides. Both of those sizes, I trade exactly the same way. All right. So yeah, when we take a look at the Russell, when we take a look at what's happening right now, by far the swing trades, the overnight exposure with about a 2 to 10 day time horizon is far outperforming intraday, our day trades for sure. All right. Next up is, let's see, questions on anchored VWAP. Yeah, Andrew. Yeah, whatever version you're using, that's fine. Some people just some people like to use visible range volume profile in TradingView. Some folks like to use the anchored VWAP on TradingView. I bring up TradingView in the conversation about volume because it's probably the best platform for analysis of price-based volume that there is. Yeah, Andrew TV. Yeah, that's usually where I'll recommend TradingView, because of that visible range volume profile, because of an anchorable VWAP. There's so many features to this platform that make it probably better for price-based volume and understanding the importance of it and measuring it more importantly than anything else. So yeah, I'd say TradingView is definitely the way to go. All right. Question here. Pat says, looks like 6E is getting a bid. Where might I like 6B? Not when it's getting a bid, Pat. So 6E, again, I'm never going to buy things as they're jumping higher. What I'll typically do is find a trend or find green candles if I'm looking for the long side. And when price sinks down into the daily price movement range like it did yesterday, that's where I want to get in, not up in here. So it's got to pull back again, Pat. I'm not a momentum trader. There's a lot of traders that when they see prices going higher, that's where they get in, and that's their trigger, and that's cool. But that's never the trigger that I ever use. And I will say this: exhaustion trading will far outperform momentum trading on a risk reward basis. That's irrefutable. So some trades a momentum trader might get that an exhaustion trader is not going to have a chance at. That is also true. But as far as risk reward goes, it's far better as an exhaustion trader. So if we think about the formula to account growth, for me, a lot of that's going to be rooted in strategies that focus on buying at support, not buying through resistance. And today, 60 would kind of be that scenario. All right, next up is, let's see, thoughts on the Boeing strike impact. Faux show, frankly, none. It's a downtrend. It's a downtrend, right? Regardless of whatever's happening in the background, stories will come up. I think there's some news on Baba today with some of the, I forgot what the news headline is. That tells you how much importance I put in it. I know Baba's in the news today. I know Boeing's in the news. I don't put any real importance on news unless it's data. So data could be earnings too. But Boeing's in a downtrend. So if we're getting negative news in the midst of a downtrend, that just won't be a surprise to me. It's already heading that way. And so here's another way of looking at news. Do we all think that the news is disseminated in the same way? Do we think that some people know things before we do? Always presume that to be true, right? Always presume that to be true. So I don't need to wait for a headline. What I can do is say, I know that whatever's known out there in certain circles will be in price and will be in volume. If I can track that, I don't need the headline, which is usually going to be kind of lagging, right? So that's the way I look at that. We've been bearish for a long time in Boeing. I mean, it's been a tough bearish Boeing since earnings, right? All right. BLP asks, what's the best ticker for trading Russell to the long side? BLP, were you under the impression there's a different ticker for a bull play or a bearish play? I don't look at it that way. I'd keep an eye on the IWM. If you want to trade the ETF, the puts and calls there are rather liquid, and the futures contract can be either the RTY. There's also a micro Russell if you want to trade the futures. Okay. Next up is, let's see here. Thoughts on BLK? Overall bullish, green candles, Dave. Yeah, green candles. And if I want to get specific to a setup, here's what I look at, Dave. See the Darvis there at 860.70. I'm not going to be trading BLK, but just sharing with you. It's a spendy name. I think there are other names in financials that are worth a look at, but keep an eye on that 860.71 level, which is not only arguably a mean reversion if the uptrend reorganizes, but I'd keep an eye on that level for a long position, but make sure that you're scaling out around that 900 level on the way up. And if we get the momentum breakout, then at that point, having scaled out, maybe having half to 2/3 of your position remaining, the second stage of this could be the Momo breakout through 900 to new highs, but I definitely want to pay myself in front of that. All right. Next up is CHWY. All right, V-Rocket. If I'm looking at Chewy, all right, so let's take a look at the year of Chewy. And what I think if you look at this, what are some important levels that have been broken today? If I'm looking, or I should say at least this recently. Let me get my drawing tools here. There we go. All right. So the first thing that's probably most important is the fact that we've broken above the equator. See that there? And when we've come back down to test it, here's the break above, right? Remaining above, testing it, staying above. So that's the first thing I'll look at, the equator. The next thing I'm looking at is what are the color of the candles, right? So you can see they're predominantly green as of late. All right. So the next thing then is where do we want to get in? And where I'd want to get in ideally would be as close to the Darvis level as possible. That's around 25. This could represent a momentum breakout, but it's not something I want to do unless I've already built a position here close to 25. So where I would find some interest in a pullback might be closer to 27 and a half, right? I like the long side. There's no question about that. Now it's just a matter of from where do I want to get bullish? That 25 area is very, very good. 27 looks to be about 27.60 and change. That area is very, very good. But the momentum breakout, which could happen, I don't want to chase it higher, but that's going to be happening as we take out this level here. A little bit of a pullback. That would be more my style. So I like CHWY for the long side. I don't like where it is right now for a position. All right. Okay, next up is, let's see, VRT. All right. VRT. So taking a look at VRT here in terms of, let's keep it on a big picture here, right? So VRT's done a couple of important things. Let's keep that same analysis. We want to be consistent in what we do. So the same way that we broke down CHWY, here's the consistency in the approach. Getting back above the 200, big deal, right? So we've struggled to do that, but this seems to be the most convincing go above that level. So you can see the green candles. All right, the next part of this is, where are the upside resistance levels? So I'll show you all this in two ways. This is the way we look at it in the mastery. So the first level that I'd be concerned about right around 85, we're breaking. So great, right? Let's see how much higher is high. And then you can see right in this area, as we close in on 95, this has been a level to watch. So that would be the next stop. We know there's another level at 105 and another level at 110. You might say, Rob, that's a lot of levels. Is there another way to take 85, 95, 105, and 110 and maybe narrow it down? Absolutely. So after we've done this Darvis work, we jump on over to take a look at VRX on TradingView. All right. So if I'm looking at VRT, thank you, bot, VRT here. I was wondering why the chart looks so weird. All right, so if I take a look at VRT here, there's two ways I can do this. I can squeeze in the year like this. So this is a visible range volume profile. This is that volume work that I told you is so much better on TradingView than any other platform. We're above the previous session close. It's a big one. Not previous session close. We're above the point of control as we get through 82.5. That's a big deal. That's the most number of shares that have been traded on VRT. Okay, so then what I want to look at is where the volume ledges are. Where are these levels that I need to watch? All right, I've got a volume ledge here, got a volume ledge here on 93, but really not a lot of things that are significantly in our way. Oh, so there's some really decent upside if we can cross through these volume ledges. So I'd add 87.5 and about 93 to the list of things that I'd want to keep an eye on. And so breaking 93 would easily usher in 95, right? Breaking that 87.60, which I believe we're going to break today, would be a really important step moving forward towards the next set of highs. So I'd say the most near-term thing to keep an eye on is this 87.60 level, because that's going to be a volume ledge. So closing above that today would be a really good harbinger for taking on 93 and then heading towards 95. All right, and that's the way we look at that. Let the previous price action show you where the resistance levels have been. Then we want to look at the volume at those levels, and you put all that together and it gives you a pretty good path to understanding where the follow through is most likely to be. All right, so that is it, gang. I am out of time as always. Thank you so much for being here for Charts and Coffee. Exactly, Michael. Caffeinate and dominate. Be good to each other, gang. I'll talk with you on Sunday at 6 p.m. for the top tier outlook, right at my YouTube channel at Raghee Horner and the Simpler Trading YouTube channel, 6 p.m. Eastern on Sunday. All right, be good to each other.